I know. Hi, Jared. It's Karen again, and I'm glad we get together and talk about the loan process for the home buying.
I'm
So,
ready.
Jared's with Liberty, and I at Liberty Financial here in Owensboro, and I am with Remax Professional Realty Group. So, Jared, the topic I wanted to discuss today was about underwriting and what that involves for really the back office and really for the consumer.
Okay. Uh, Technically, there's two parts of the underwriting system. After I do the application and the buyer sends me the pay stubs, bank statements, tax returns, everything like that, it goes through a junior underwriting phase, and they kind of comb through and look and then make sure that what we have on the application lines up. And then after it goes through processing, then it will finally be submitted to underwriting for final approval. This is where the underwriters will go through it with a fine tooth comb and make sure everything is in line for regulation, the numbers for ratios. So it is the final step, but it is a very strict process, and they had to go by, their guidelines that they're given and so forth.
Okay, so does that vary for each type of loan or loan product type, or is it just a general a
No,
process?
no, each loan product has their own specific guidelines. Like when we do a Kentucky Housing Corporation loan, there are specific guidelines for Kentucky Housing Corporation that have to be met, such as their ratios, the front and back ratios are 40 and 50, and those have to be stuck at those numbers. An
Okay,
FHA loan, they can go to 52, 53% as long as it's strong enough, and
okay,
it will pass. But those are hard numbers.
okay. And then if I recall on underwriting, they will look at bank statements and
Yes.
make sure that the inflow of funds and where it's coming from matches what the client has said.
Well, not only for that reason, sometimes, and this is more along the lines of an FHA loan or something like that, they need reserves to make sure the loan is strong enough, uh, to pass. Sometimes a loan that is borderline, refer can go approve if they have $2,500 in their bank account because they're showing 2 or 3 months reserves, and that shows the loan is stronger.
Okay.
So if they say, yes, I had that in there, then the underwriter will make sure that indeed they do have the money in there that they said they do.
Okay, so the reserves is basically a extra cushion in their account that
Mhm.
could help their loan process.
And it can be for that, or if they're, putting down $20,000 for a down payment, they have to make sure those funds are available because if we get to the closing table, they don't have the funds, then, you know, what are we gonna
That's
do?
not going to work,
So
obviously.
yeah,
So
bank
no.
statements are very important for many different reasons too.
Okay, well, great. And it sounds like to me that we're talking a lot about ratios. And ratio, we're going to include a document in that in the description about this video, and underwriting, perhaps just some a graphic about underwriting. So certainly appreciate it. And Jared, always appreciate talking with you. And be sure to look out for our next video. Thank you.
I'm ready. Let's do it another one.